We're not going to spend for a national audience much time on state law, but in addition to federal law in our federal system, you have to worry about state and local law. Couple of notes. There are at least 12 or 13 states that prohibit employers from paying their employees in scrip or require the definite payment of employees in U.S. currency. And again, you have to have your local attorney check, are there statutes that protect or deal with employer-employee relationship and the mode in which employees must be paid. Again, some of this comes out of our Depression, where you had a lot of script. I mean, again, if you want a little about the historical background, and as I say, it is done on a state level, that states are protective of employees and want to be certain that they are getting paid in U.S. currency, not in our terms, local currency. Very, very few states, apart from protection of employees, pose problems for local currency arrangements. And when I did a 50-state study a couple of years ago, Arkansas and Virginia, strangely enough, and I have some suggestions how you can deal with local statutes. So what I'm saying is that apart from protection of employees and how employers must pay employees, states are not going to pose a problem here for local currency arrangements. And I think that's a fair generalization that you can take away. Now, to come to the question of, apart from the IRS, where does this go in 5 or 10 years? You all will have to carefully monitor. If this takes off, and 1,000 communities have local currency, will there be some changes here in terms of not only dealing with coinage, but will the monopoly be legally vested in the U.S. government, and which it is in some nations, that the total power to issue paper currency or engage in these electronic transactions is in the national government. That is clearly not where the U.S. is now. Where this is going to be in 5 or 10 years is sheer speculation. Federal income tax. Yes, it's that time of year. Would that we were having this panel in early April, that would even focus your attention more on this topic. But it's late February, and I think there's enough attention that we can focus. Let me distinguish between barter exchange systems on one hand and sort of bargain purchase notes, discount notes on another. Let me start with barter exchanges. You may not want to hear this, but the income tax aspects of barter transactions, that is, you exchange a commodity or a service for another commodity or a service, are quite simple, quite straightforward. The fair market value of the goods or services you receive, in other words, the benefit you get, is income. I did an interview, and I don't know, for a local newspaper yesterday, and I think the journalist said, suppose you make $20,000 a year, that's a W-2 form. And, that's how the government knows what you have earned in 1997. The employer sends you a little statement. At some point in January it says, your income was $20,000 and they have withheld so much in federal income tax, so much in state income tax. That's how the federal government, state government collect. But these barter arrangements, there's no W-2. So that if you do something for someone and then get something back, and let's say it's worth $200, that's the benefit to you, that's income to you. That has to be reported as other income on the 1040 form. Take an example. The artist Peter Max. He had a problem last November, actually in 1997. In November 1997, he pled guilty for criminal tax fraud. Max acknowledged that he bartered his art for services and property and did not pay the required income taxes. In a criminal prosecution, prosecutors alleged that he tried to cheat the IRS out of taxes owed on over $1 million in art sales. I mean, again, the IRS, and you will see this in March or early April, in your community, will bring prosecutions against prominent people, and they usually do it in the March-April period for the obvious reason. And so that you are aware that not reporting cash transactions or not reporting barter transactions, you are subject to criminal penalties. Now, well, you say, what happens if we don't have a direct barter transaction, but we do an indirect third-party transaction? We have a barter exchange. So that if a lawyer and a house painter belong to a barter club or an exchange system that provides a directory of members who can contact each other directly and negotiate the services to be performed. So the lawyer performs legal services for the painter, and the house painter in turn paints the attorney's house. It makes no difference whether they arrange it directly or through a barter system. They each have to include in income the fair market value of the services received from the other, who are part of this network and a directory. Again, whether it's a direct exchange, an indirect exchange with credits, the member receives income for federal income tax purposes when those credit units are credited to his or her account in the amount of the US dollar value of the units. Now, the question goes, and this is one of the points about local currency, will the system of self-reporting, and this, I think, is where, the government, if this starts to really, really grow, at least in the U.S., is going to be very concerned about the income tax obligations of people. Yes?
To what extent would, if there was a system, would the person or organization running the system be responsible for reporting?
Oh, okay. Next thing. What the IRS thought about when you had an exchange is that you have information reporting requirements. It's like a W-2, but these barter exchanges have to give you information forms. Now, if you look at item number 3 in the handout, this is from the Internal Revenue Code, and I tried to keep this short so that we can focus on things. A barter exchange is subject to an information reporting requirement. Now, the question that arises, well, what's a barter exchange? And the definition there is in item number 3. It's an organization of members providing property or services who jointly contract to trade or barter such goods or services. So that, in other words, a barter exchange for the purpose of the information reporting requirements is an organization of members who provide goods or services and who either jointly with each other or with the barter exchange contract to trade or barter goods or services directly or through the exchange. And also, this notion of getting credit as on the barter exchange's books are a medium of exchange. Now, the IRS has given some leeway here. The barter exchange doesn't have to do the information reporting because it's not a barter exchange if it's an informal exchange of similar services on a non-commercial or what I'll call gift basis. But, you know, you think of your community and how you're going to set up some sort of a barter exchange, some sort of a let's system, if you will. That is being done on a business-like basis. I mean, the argument you would make here is that it's non-commercial, and I'll show you how that works out. I mean, Edgar Kahn alluded to it yesterday. I'll develop that for you. How, if you can maintain that the barter exchange is doing this to promote informal exchanges of similar services on a non-commercial basis, then the barter exchange doesn't have to do the reporting. I don't think many groups are going to qualify. If you're going to get into this barter exchange system and creating credits, units of account electronically, whether it's a paper system or now for the late 90s into the 21st century, you're going to do it, you're going to computerize this. That's more than likely going to be a barter exchange. Now, what happens if you are a barter exchange? What do you have to do? You have an information reporting requirement. Each exchange, each of property or services made through the barter exchange among the non-corporate members must be reported on a separate form. Again, I'm telling you what the IRS requires. What the reality is a different story. And you can find this, the IRS has a website now, and you can download all these wonderful things. It's Instructions, 1997, Instructions for Forms 1099, page 14 and 15. Now, okay, so that you and I, non-corporate members, each time we do an exchange through a barter exchange, the IRS has to give us, not a W to the IRS, tell it's on my mind, the barter exchange has to give us a 1099, like an equivalent of a W-2 form. Has to tell you that you earned, you know, X units, X dollars. Now, when are property or services exchanged through a barter exchange that triggers this information reporting requirement? Aren't you glad you asked? The barter exchange arranges a direct exchange of property among its members or exchanges property or services with a member. That's typically not what's going to happen. It's going to arrange with, so that members can do the exchanges. Or if payments for property or services are made by means of a credit on the books of the exchange, or in script issued by a barter exchange. Now, this is the real bite that sort of Michael Linton, you know, quickly referred to yesterday about, you know, a local currency set up in the form of what the IRS defines as a barter exchange, when it's in terms of unit accounts credited to members, each one of those transactions, the barter exchange has to spit out a reporting form.
Tell them the penalty.
Yeah, you are subject to sanctions. Can we leave it that way? You have personal knowledge?
For the exchange is liable. If you exchange more than one time, have more than 100 exchanges,
Yes.
and you don't, and you fail to do this, you're liable to a fine of $50 per exchange.
Mm-hmm. Okay. And that's can be, you think of a Let's type of system where even with several hundred members the numbers just start to get mind-boggling. You must do it.
Who must do it?
The barter exchange is like the employer with the W-2. The barter exchange has the responsibility of kicking out this form. Now, what's on this form? It's called a 1099-B. It's not a W-2. It's a 1099-B.
How to avoid the pitfall of this happening?
Excuse me?
Is this how to avoid?
Oh, yeah, you got to comply. You can, but it's just like an employer gives you a W-2. 1099-B. You have to tell the name, address, and social security number of the member providing the goods or services, what the goods or services were, painting, legal services, whatever it is, fill in the blank, and the amount. Now, the amount in a barter exchange is the fair market value of credits to the account of a member or credits issued to a member by the barter exchange. So they want to know they want to know who is getting it, who has provided it, and the dollar amount. And in addition, all of those have to be bundled up by the barter exchange each year in January, February, and the barter exchange has to file an aggregate form that's called a 1096 form.
I believe by tape, too.
Well, depending on how many there are, you get into all kinds of details, whether it has to be on magnetic tape, Yes.
When you say fair market value, is there one publication or resource that you go to, and how do you determine that?
They're going to use the values. You can use the middle.
They will you have to determine some sort of a pricing in terms of what fair market value is. Usually a willing buyer and a willing seller. There's no, like a blue book for cars, we don't have that. That is a matter in, technically in question, but presumably if this is going to be in a transaction between you and another person, or you providing so many units to the exchange, a number is going to have to be arrived at. And it has to be a reasonable, you can't say the number is 50 when it should be 500. Yes?
Okay, so like in the time dollar system, part of the underlying philosophy is trying to get away from the pricing system.
Okay, time dollars, I will...
IRS forces you to...
No, there's an exception for time dollars. I will get to, that one I will get to also. But time dollars, now, let me just do a couple of things and I'll take some more questions. Who is exempt? If you're running a barter exchange, how can you get out from under this? If you have fewer than 100 transactions during the year, how realistic is that? Probably not. Probably not. And then I want to talk about time dollars. But there were some questions, and let me take some questions. Let me hold time dollars, but take your questions.
Comment. What's disadvantageous about this for low-income people is it gets counted as a credit, and it gets taxed, and you may not receive the service for 2 or 3 years. So you, in a sense, have paid taxes in advance if you're getting whatever it was you exchanged for.
And also the taxes are due. The United States government, at least in 1998, is not interested in getting paid in Ithaca hours. The United States government wants its currency, or a check, and in May they will be going to an electronic system as well. So you have, whether you are at any level of the income spectrum, have gotten a benefit in kind that come April 15th, the United States government wants its taxes paid with U.S. currency. And that is...
You may not turn that credit in for
2 or 3 years, yes. Or even if you do, even if you do get the benefit of the credit, you don't have the cash necessarily. I mean, that is always a problem with in-kind arrangements or barter arrangements that the U.S. One is when you're going to get the benefit of this, and two is the United States government wants to be paid in cash. Yes.
Did I hear someone yesterday at the very beginning of the thing, that one guy, I can't remember his name. Michael Linton?
Michael Linton?
No, not the guy who gave from Sonoma, the economic perspective. Anyway.
Well, give me, what was it?
Say, I got way off. I'm gonna remember though. It's really important. That, the barter exchange has something like a $2 billion thing already going each year.
Yes, that is a commercial barter exchange. They take typically 10%. I mean, if you do a $100 transaction in a barter exchange, they take 10%. Is the normal way, I think. Yes.
They take 10% of the barter exchange ordinances or whatever.
Yes.
And so that's 10% of cash, so they can just pay in cash and taxes and all that.
Yeah, well, and the 10% is obviously their startup, their operating expenses, and one of the operating expenses that they have is all the paperwork.
Right, and taxes.
And taxes, yes. Mm-hmm. Yes.
So far, the IRS interest in this has been at the corporate level, where I'm trading you 50 carloads of paper in return for 750 microcomputers or something like that. I mean, they're interested in the big time stuff. And they're also interested in the doctor and the lawyer and the dentist that are doing barter exchange.
But the question is very relevant. What if there are 1,000 local currency systems set up using a barter system, which is, in the terms we have been talking about the last day or so, is a let's credit kind of mechanism, and the reporting is not done. You are, the barter system, the barter exchange faces penalties, but does the IRS start going after the barter exchange and also trying to bring criminal sanctions? I mean, you then get into how nasty can the IRS get here?
Well, let's ask the other question. How many local currencies have had any negative inquiry or penalties imposed on by the IRS so far?
But Jim, the reason is, and I suspect why the hours system has taken off, is that in an hours system you are not operating directly as a barter exchange.
And you also don't have the record system.
You don't have the record system. It is left to the individual when he or she does the trade or gets the benefit to self-report. And that is, are your members self-reporting?
One of the things that IRS has done is looking for people that have the tendencies of not reporting report income. So what they've done a lot with is find people that are doing low report and they're living in good neighborhoods. So it seems that the people that are doing this kind of work would be an easy one to tag and say, these people are looking for an edge, let's hit them. It would not be a big stretch.
But that's where the next 5 or 10 years, it's not the FBI that's going to be hunting down people. It's, are people self-reporting in an hours system? Is the barter exchange reporting properly in a let's system?
But ultimately, this has evolved into a political battle, much like the battle that took place in Congress over airline mileage club redemptions. Because the IRS wanted to count, you're redeeming your airline miles for a ticket. They wanted to count the value of the ticket as income to you, therefore taxable. And fortunately, the upper middle class lobbied Congress successfully to say, IRS, stay away. So this will become a political battle at some point, that there are 1,000 of these things going, that the IRS says, hey, we want to really go after and tax these transactions. Then there will be a political fight that the advocates and the lobbyists will have to work on. I don't think it's a substantive problem at the moment, though.
But I'm only telling you what the law says on the books.
Good, okay.
What the political ramifications are, what people are doing. I'm only telling you what they should be doing to stay out of trouble with the IRS. Yes,
I don't know if I'm missing something here or not, but it seems to me that if, that system, you make sure that every member knows that it's his or her duty when they set a price for the thing that they're bartering, that they take as a part of that price what they need to take in dollars, in federal dollars, in order to cover their income tax, and then go ahead and declare their income as taxable and pay it with the dollars that they've received. It doesn't
I don't have-
obviate any of the problems? The IRS isn't going to care.
well, except the exchange, the central mechanism must do this information reporting.
Okay, but there's got to be no problem with that as long as people are clear that they have to pay their income tax. I mean, obviously this thing is never going to fly if it is either obviously or sort of subliminally advertising itself as a tax doc.
Okay, but that's what I'm trying to put across, that you as organizers of local currency systems have to be clear on what your organization's responsibility is and what the members' responsibility is. What the members do, I think you can only say by way of a disclaimer, and I think you should do it out of protection and long-term sustainability of the organization, to say that the members have an IRS obligation. And if, the IRS comes to you not as a member but as an organizer of an exchange, you can say to the IRS, we have tried to apprise our members of their legal obligations. Yes?
In the early 80s, we had gotten a letter of waiver from IRS which said, since this bartering was being used within a social agency framework within a defined community, that they released us from any of these obligations.
Okay, now, let me go, I know there are lots of questions, but let me talk about the time dollars exception.
That was before we went to ours.
Okay.
Different exception.
Okay, but the time dollars is a different one, but it's one of public, I don't know if yours is of public record. The time dollars is of public record, so that you can all get hold of this. Now, let me talk, and then maybe this is the point, to talk about a special exception for the information reporting requirement exists for credits posted to volunteers' accounts in a time dollar exchange. Now, one thing is, let me just step back from this. One thing is to say that your barter exchange, your clearinghouse is not doing exchanges. That's one sort of argument. You're not subject to the reporting requirement. What the time dollars said is, okay, nonprofit organization running a community self-help program. Edgar talked about it yesterday. Operated by volunteers, maintaining this file. Either it can be a file, a print file, an electronic file of individuals with specific skills, and the organization links individuals with skills to people who need assistance. And the assistance provided is voluntary. And the organization, Time Dollars, this local organization, is a clearinghouse, has to keep records of the time that a volunteer spends on providing the services. And when a volunteer performs these services, for example, for the elderly, or whatever you want to fill in, the organization credits the hours spent to the service provider's account, and conversely debits the hours to the service recipient's account, let's say an elderly person. Now, well, the IRS, and this is letter ruling, if you want to get it, 85-36-060.
How do you get it? Can you get on that?
Probably can get it on the net. In law school, we get it off of Lexis or West. There are legal information services, but there is, in print, I don't know if you can get this from the IRS website. You can get it. There are publications of IRS private letter rulings, but I'm going to give you the gist of it so that, you have the site. But what the IRS said is that this looks like a barter exchange, but they say it's not. I mean, it has all the attributes of an exchange, you know, bringing people together, matching goods and particularly services in a time dollar system. But as Edgar said yesterday, quite rightly, the IRS concludes that this community self-help program was not a barter exchange for purposes of the information reporting requirement. Now, why? And let me just read you the 3 or 4 sentences. I'm going to read them slowly. Under the taxpayers program, the time dollars program, the credits posted to the volunteers' accounts have, according to the IRS, no monetary value. And again, this is their notion, what Edgar commented on yesterday about money. That these voluntary activities, they don't find as part of a traditional monetary system. They continue. Service recipients, let's say the elderly, do not incur a contractual liability upon receipt of services. Service providers do not earn a contractual right to receive services or any other compensation when they perform services. And here's the punchline. The credits serve merely as a means to motivate volunteers to continue their community service. They then conclude that time dollars is not a barter exchange, doesn't have to do, it's not a barter exchange under this 60-45 provision of the IRC. It's not subject to the information reporting requirements. There's no penalty if you don't turn in the information reporting requirements. So that is a tremendous advantage for a time dollars program from a tax standpoint. Ernie.
Yeah, the issue of account-based clearinghouse, clearly a LEC system is that and is not an organization of members providing property or services. It's a clearinghouse.
Well, that, again, is that the IRS's, I would say, it's, that's we're going to talk about a definitional problem. Yes, Tim?
Question that comes up often is, we have people who do dog walking and babysitting and all kinds of things that are not a part of their normal income stream. Now, what we tell people is basically what Paul Glover tells people: you are liable to pay income tax on trades of professional nature. Now, are there trades going on in lets and hours and so forth that are not of a professional nature, so therefore cannot be counted as income?
I do not think that is a proper interpretation.
So every trade made through one of these...
Unless it is a gift transaction that is done, the classic case speaks out of detached, disinterested generosity, out of admiration. I don't think the people are doing dog walking for the goodness of their heart. They are doing dog walking to earn credits. I would say, and again, this is a problem, and it may be minuscule amounts, but at least in concept, that is income in the eyes of the IRS.
So even if they were doing it prior to that, purely as a beneficial situation, where somebody is doing dog walking and they've been dog walking for 10 years, and we come in and we put in this thing that they now get credit for dog walking, even though now they build up their credit.
They're getting a benefit.
They're getting a benefit. And there is another market where the house painter could say, I'll take your credits and paint your house for those credits.
Yes, that is income to the...
Three of those have to be reported.
The house painter has income, the dog walker has income. I mean, it may be, modest sums, but, when you start to get into, beyond de minimis amounts, in theory, in concept, that is income to the dog walker or the house painter. Sadly, must I tell you that.
So the 14-year-old doing babysitting.
Is income. In, if I had somebody here from the IRS, what are they going to do to the 14-year-olds? The practical matter is another question.
It's the barter exchange network that's a concern. Yeah.
Well, the barter exchange network has to send out this 1099 form for each transaction. Yes.
So is there a way to use the paper currency as the credit of a time dollar instead of?
Well, what the hours system, the paper system is, you are breaking, you are trying to say that that's not the central mechanism is not providing the medium of the exchange. And what as you create more of the paper currency system where people sort of do these things on their own, then you don't have a barter exchange. They personally have the responsibility of self-reporting the benefits.
But the organization still does too, right?
No, but only on the original issue.
No, they are clear. If we're into, you sign up and you get 4 hours. I mean, what kind of can you give me a model that
You are offering to do some community service or some service.
Mm-hmm.
Then you're issued
4 hours or
Right.
something like that.
That's all we record in terms of transactions.
Okay, so
That's a payment.
that's and what are you getting the 4 hours for? Are you getting it just for signing?
Because you're offering this as a community service, basically.
Is the organization, or is you the individual? Who's the you, the individual or the organization?
Yeah, the organization is offering the currency in acknowledgement of future community service of some sort.
Well, part of what you're doing there is you're evaluating the value of that service, and then that puts it into the area where it becomes measurable and taxable. But if you did it afterwards, and somebody said, I gave 4 hours, and you put it into the time dollar context, then you don't have a problem. But you can't do it ahead of time and say it's worth 4.
Okay.
And then the person who is receiving that service is reciprocating not by however many hours you spent. But you're not creating a pool of uncovered hours.
So the individual may. One of the things that I mentioned yesterday, it seems to me very important in any kind of a local currency system, we get all these various things floating out there, is to somehow involve businesses in a local currency system. And I spoke yesterday about a bargain purchase or the discount notes, the deli dollar kind of things, as a basic way to involve businesses. That is, assume a business issues a $10 scrip or a note for $9. What are the tax consequences to the purchaser? You or I, not the business. Well, you as a group sponsoring this kind of note or script arrangement would like to be able to say that this is a non-taxable bargain purchase. That is, if you go into a store and you buy something, a $10 item on sale for $9, you just got a good deal. Getting a good deal is not taxable to the purchaser. And the IRS reaches, but someplace there's a limit. Now, that's the way customers, purchasers of these notes, you as sponsors of this kind of business involvement would like to have the IRS cast it. There's another way of looking at it, and we don't know. My guess is it's probably going to be a tax-free discount or a bargain purchase. Another way of looking at this, taking a $10 note and you get it for $9, is to view this as a discount note. More specifically, the $1 difference upon redemption is interest income. And we all know the IRS is interested in interest income. I think you could make the point that this kind of a bargain purchase arrangement is more falling on the bargain purchase tax-free side, and the purchaser, the consumer, the customer doesn't have to worry about interest income here. But that's one that will have to be worked out. And again, if business involvement in local currency takes off, is going to be something for the future. So that's another point that I would, there may be some further developments here over the next 3 or 5 years. Now, I want to come back to the question that was raised right at the beginning. What happens if you use some sort of a local currency arrangement as a way to provide equity or financing for a local business? Not in the sense of debt, but equity. Now, there the problem, one can be IRS, but more likely is, at least on the U.S. federal level, Securities and Exchange Commission. You have federal security statutes. That is, and the basic concept of this, is if you raise capital from people, what I call OPM, other people's money, you are engaged in an issuance of securities. And you are subject, it's not an IRS, not a tax problem, you have to register these securities. You have to provide the purchaser with a disclosure document. It's an entirely different federal problem. And I don't want to spend a lot of time on that, but that, again, if this, involves or is construed by the SEC, a local currency arrangement as a vehicle to raise capital for a business, you could be engaged in the issuance of securities without the proper registration, and you are off to a whole other set of federal problems. And I hasten to add also, you have state law problems with the unauthorized issuance of securities. Yes, Alex.
So, like the example that you had with the jelly dollars in Massachusetts, that would have been raising or selling securities for raising capital.
It potentially could be a federal securities problem, yes.
But isn't that a debt?
And I think that's why our system, at least from a legal standpoint, has taken off in the U.S. That it, is not free of all tax problems, but may have the fewest possible tax problems. Yeah.
But agreed, we can have him, maybe you can have a group to sit with him at lunch, and as part of our closing, we can come back to this topic, because it's obviously a hot issue for people as far as what's going on. Well, lunch is ready.
My name is Alexander Kim.
Okay, spell that last name.
K-I-M is in Mango.
Okay. And, well, just explain to me the project you're involved with and, how it got started and where you are with it right now.
Sure. The program started through a HUD grant to Tulane University. It's the first of its kind. It was a multi-million-dollar grant spread over 5 years. It was to combine the academic resources of the university with the public housing institutions in New Orleans. It started out, we focused on the C.J. Peet housing development, which is the oldest housing development in the United States. We had several different plans. We had an education group, a health group, an economic development group. By far, the economic development group was the focus because you're dealing with such a poor environment. Of our program, we have developed great relationships with Lockheed Martin, which builds the space shuttle boosters, the United States Postal Service, and a lot of local businesses. My program is part of the economic development group, and I created and administer a local currency. This program is aimed at, the target population is the residents of the public housing complex, which comprises of 1,500 residents, over half of which are children. So you're also dealing with 900 kids or so of the 1,500. Of the remaining adults, we have 470 on our list as far as members of our local currency. Because actually, we've done a really good job about infiltrating the community and getting all of them listed and active in our organization.
When you decided to do the local currency, did you look to other programs as a model, and what were those programs?
Right. When I was undergraduate at Baylor University in Texas, I took a graduate course in monetary systems, and one of the case studies we did was Ithaca Hours by Paul Glover. And I remember thinking to myself, well, you know, that's such a great idea. I hope someday I can be involved in something like that. Well, the next year when I entered graduate school at Tulane University in New Orleans, as a graduate assistant, I was assigned to starting up a local currency based on the Ithaca Hours model. And so, by a matter of fate, I ended up with the same situation that I had hoped for as undergrad. But that's really, we used the Ithaca Hours startup kit, took a lot of their ideas as well as kind of blending it with a lot of the local flair of New Orleans.
Anything different that you did, that you didn't do that Ithaca Hours does?
One of the main differences, our unit of currency is based around a $5 sample as opposed to $10. Part of the reason is because we're such a low-income neighborhood. I found out that the average unit transaction was about $5. Minimum wage is what most of the people have occupations as, is around $5, as well as the standard of living being about half of what New York is. When you go to the store and buy a bottle of wine, it's about $5. And so that's really, it seemed like what people were using as unit of transaction. That's why I settled on that amount. Another difference is that we're dealing with a population that is, by definition, non-skilled, non-professional. Ithaca has the luxury of being an educated community, which is very progressive, and you have a lot of local grocery stores, a lot of health food stores, different types of professionals there. We have people who generally don't have high school diplomas, maybe have their GED, maybe have one or two community college courses on with them. It's rare to find, not that rare, but occasionally you do find somebody who has a nurse, is a certified nursing assistant or some occupation like that, or had that kind of training. And so we also, that was another uphill battle. We ended up with approximately 50% of our list either being cooks or child care people or elder care. And so that was also another difficulty that we faced in getting diversity within our association.
So you had a lot of knowledge about this, a lot of education, you studied other systems. What kind of surprises did you come up against that you didn't expect?
What I didn't expect is actually, in low-income neighborhoods, you tend to have solidarity that's rarely found in other neighborhoods. You have people that have been living in the same neighborhood for 3 generations. Now, when you're dealing with this certain population, it's 3 generations, it was about 45 years. Now, these people always growing up with neighbors changing neighbors' diapers, helping each other out. You have a strong social fabric within low-income neighborhoods. Sociologists have found that when they interview people in low-income neighborhoods and offer the chance to relocate to a middle-income neighborhood, most of the time they decline because they have this social network there. Now, with that in mind, it seems like it would be a natural progression to have a local currency because people are bartering with each other anyways and have been. However, people are not too keen to the idea of using money as a medium of exchange for these things, partly because they've been doing it just for each other for so long, partly because annual income is so low in these neighborhoods that they don't, $5 is actually a substantial part of their monthly income, and they don't want to be able to, they don't really trust what they consider still funny money as a vehicle of their time as opposed to federal cash. Like I said, there's some people that pay $25 a month in rent. There are quite a few people who do. And $5 cash versus $5 local currency is quite a substantial part of their housing. That's one reason I'm working with the Housing Authority in New Orleans, and they've agreed in principle to accept $10 a month in our local currency. We're still working out the numbers for that. But for those people who are very low income, this is a great way to solve their main issue, which is a roof over their head.
So that sounds like a major issue. How did you overcome that fear of the funny money?
We're not completely over it yet. We're still kind of dealing with that. One way we've been doing that is we've been giving a lot of high-profile type situations where we have local businesses involved as well. Like a Pizza Hut has agreed to accept local currency as part of the payment. It's the Pizza Hut right on the edge of the housing development, with agreement that if any other local currencies appear in Louisiana, in the state of Louisiana, they will honor their own respective local currencies as well. There's a local dentist that accepts local currency there, local grocery store. The community center offers a hot lunch program every day. They accept script as well for their lunch program. That's one way of giving credibility, and I feel like the real way to give credibility to a local currency or to anything at all is to create a demand for it. Once there's demand, the residents will honor it and respect it accordingly, as there's an intrinsic demand for it. Once you have the housing authority accepting it for rent, that creates its own demand. If drug dealers, because we're dealing with low-income neighborhoods, if drug dealers were to accept this local currency, that would create the demand for the currency as well. And so, not that I'm petitioning drug dealers to do so.
It's just a sign of the acceptance of the community.
Right.
Of the money. Did you negotiate the thing with Pizza Hut?
Yes, I did.
Tell me a little bit about your experience there and how difficult it was, or what went into that.
Okay. One of the benefits that we have, as opposed to other local currencies starting up, two of the benefits actually. One is we're a HUD-based grant, and so startup costs were never an issue. I'm paid through a HUD grant. I have a budget every year through the HUD grants. They pay for the printing costs, the directories, everything associated with that, and that's usually the main problem for local currencies to start up. Another main benefit that we have is because we're dealing with low-income neighborhoods, people are generally sympathetic to their needs, to the situation. New Orleans is a city with 38% poverty level, which is, 2 out of every 5 people you see are on some kind of government assistance. So when you're doing that, people in New Orleans understand that there's quite a bit of need for assisting low-income residents. Fortunately, the owner of this Pizza Hut chain, of all the ones in Louisiana, grew up in a housing development in New Orleans. He's very sympathetic to the needs of these people. Many people on the staff are also former residents of public housing. When I approached them, they certainly wanted to help out the housing development. But what had happened is, in their previous efforts to help out housing developments, there was quite a bit of corruption. They used to give out free coupons for small pizzas to kids in schools. And every time they read a book and turned it in, a teacher would give them a free pizza coupon. Well, it turns out that the teachers would siphon off coupons off the top for themselves and their friends and their family, and they eventually just scrapped the deal because of situations like that. I showed them all the verification methods that we do have for this local currency, and as an economist, I'm very, very paranoid about inflation and how I keep a tight control on that as well. And they were very receptive. I think what has really helped me the most with local businesses is that they can accept the local currency, which will help the community. It really has a twofold benefit. One, it creates good relations with the people who patron your store. Second, it is also giving back to the community, which most people who open up stores in housing developments are interested in. Otherwise, they'd move to different neighborhoods to do so. And really, the catch for Pizza Hut was that it was a great tax break. It was just the value of acceptance of the local currency is very common to a little bit more than what the coupons are in the Sunday paper. Now, if they're accepting those coupons, now they can accept this local currency and then in turn donate it to churches, nonprofit groups, and get their tax deduction off that coupon, or off the local currency note. So basically, it's a coupon that can be turned back and gotten a tax deduction for, and therefore their bottom line isn't as great as the coupons issued in the paper.
You mentioned the inflation issue. Talk a little about that in terms of what goes in your mind in terms of how you issue the currency,
right.
How you keep track to see if you're over-issuing or under-issuing. What's the thought process?
Really, my fear at the beginning in deciding how much to issue, I know most hour programs issue 2 or 3 hours, $20 or $30 worth. That seemed like quite a bit for this community because income is so low. I kind of faced the $1, $100 paradox, where you gave $1 of currency out, it would become so rare that people wouldn't want to give it up. But if you gave out $100 worth, it would become so common that people would be willing to spend it any place, and it would eventually devalue the currency. People would ask for greater than the face value of the currency for tasks performed. I settled on $15 worth, 3 more money notes. And after that, I monitor it by really, my office is in the public housing development. There are several residents that do work with me who help me with the local currency program. They also paid through the grant as well. And I really monitor how often the currency is being spent, how it's being spent, between who, through surveys. And that way I find out if it's not really being spent enough, people are kind of slowing down, then I'll go ahead and release more currency into the community. If it seems like people are spending an awful lot or people are paying an awful lot for certain tasks, then I'll go ahead and stop release of currency into the community, or I'll actually pull some back in. The community center does have does keep a surplus of local currency there, because that's the most common place where people use their scrip. And I'll have actually residents who will volunteer for me, volunteer at the community center for tasks, and then with that currency they'll go ahead and bring it back to me. So that's my way of pulling currency back out of circulation.
Is there a board that decides this, or is it you alone?
It's by myself. I'm Alan Greenspan, all by myself.
You're more than Alan.
Yeah, it's really done by myself, and it seems like I'm too easy to make. It seems like an awful lot of power for myself. One of the greatest things about local currency is that if you make a mistake with overinflation, the currency dies and it's over. And that's why I'm a little bit paranoid, a little bit skeptical about any time I release more money into the circulation. Like over Christmas, I went ahead and issued a whole bunch more currency to all the active members. But now that Mardi Gras is this Tuesday, I was thinking that I could issue more, but I decided not to because it seemed like there was enough out there.
But you have even a harder job than Alan Greenspan, because Alan Greenspan can look at the price of commodities, you can look at the price of gold, you can look at interest rates, but you really can't do that.
Right. I'm really faced with surveys, and almost blind surveys of people known to use the local currency. So far I haven't run into problems, so whatever I must be doing must be okay. But it is a difficult situation, and I'm kind of winging it by ear. But I think as each 6 months go by, when I evaluate it and reevaluate it, it seems to be going all right. Actually, I think I've kept a little bit too tight control because there isn't as much spending as I would like there to be.
And so most of your analysis is based on qualitative information in terms of talking to people.
Right. Talking to people, surveys done, sample phone calls done through the directory, finding, have you been spending this local currency? How many times have you spent it or earned it in the last week or 2 weeks?
Interesting. Okay, go ahead and can you? Okay, Alex. Give me your comments on the application of this program to other systems or the future of the program.
Right. I really see this as a type of situation that's very optimistic future. It seems like low-income neighborhoods stand the most to benefit from programs like this because when you're dealing with middle to high-income neighborhoods, it's easy to spare $100 here, $200 here. It doesn't break your bank. It doesn't put you over. When you're dealing with a monthly income of $500 for a family of 4, where you have to pay for housing and for groceries and diapers and baby food, it's quite a chunk of your time, or quite a chunk of your money to be investing in a local currency. That's really the duality that we're facing in the situation. They stand the most to win from the situation, but yet if it fails, they stand the most to lose from it. HUD has told me that this is the type of program they would like to establish in every housing development in the nation, pending on the progress of this one. It puts a little bit of pressure on me, but still it's a very optimistic thing that I understand that this is the kind of thing that, if done properly, can stand to benefit future generations to come. I'm really thinking, I know there's a couple other programs that tend to integrate low-income neighborhoods. The Philadelphia Time Dollar program, I believe, is trying to integrate low-income neighborhoods, and Paul Glover and I have been corresponding, and he's been talking with the local housing authority in Ithaca as far as allowing the residents there to pay in scrip as well. I think, in retrospect, the best approach to this type of program is to take middle-income neighborhoods and then slowly integrate the low-income neighborhoods into that. As an economist, the problem I see with that situation, though, is you'll eventually see the same distribution of money as you do with federal currency. Money will always go to the people who are more skilled, more motivated, more financial. Money always flows toward more money, and you'll eventually see this capital exodus from the low-income neighborhoods. That's why we're focusing this purely in the low-income area, because we're trying to keep the money within the community. You see these residents spending their money at the local grocery stores, whether it be the chain or the small corner stores, and they're experiencing the same thing that third world's experience, and that's called capital flight. You'll have their money that they earn spent at these stores, and then they'll leave their community. Chances are never to return again. In middle-class, upper-class neighborhoods, you have the high volatility of money staying within the community, and that's why we're trying to close this off into this area. There's quite a bit of support for this program as we're trying to integrate different things, different programs, different businesses with this. We have a child care co-op starting where we'll be using scrip to pay the residents for that. We also have a community garden that we're expecting our first harvest by the end of the year, where the residents can buy fresh greens, Creole tomatoes from the garden with their local currency, as well as the gardeners who do operate the garden can in turn go to local farmers market. Well, there'll be allotted a free spot there, in order to sell their goods. The prospect for this local currency, or for local currencies in this type of situation, for me is very optimistic. I'm somewhat of a romantic and idealist, but I think that almost all visionaries are at one point or another. I'm not going to be so bogged down by the details of things to be discouraged by it. I think that I was talking to a lady here from D.C. who's trying to establish a local currency type system, although not script. I believe it's going to be a time dollar system in one of the housing developments there. This is the first time it's ever been done in purely low-income neighborhoods. And because this is an academic institution where I work for at Tulane University, and it's a government grant to us, really these resources, these mistakes that we're making as well as successes are meant purely for the benefit of other people, for academia in general. People are always encouraged to contact the program in order to find out more information about what we've done, whether it be publications that we've made in various journals as well as to the National Advisory Committee, or whether it be direct contact to us. We've been featured in National Public Radio. ABC Nightly News has already filmed us, and it's in the archives to broadcast later. Time Magazine, I believe, is coming out this next Monday with an article about our program. Great. It was really microenterprise was my focus. But I was always kind of going to stuff.
Full name?
Joanne Lee. I'm from Olympia, Washington.
Joanne, right?
Yes.
Lee, what's last name?
L-E-E.
Okay. And Joanne, what's the organization you're with?
I'm with Sound Exchange, the local currency group in Olympia.
Okay. Just tell us briefly how the whole project, how you first got involved, how the project came together.
Okay. I started as a volunteer for...
Go ahead and look at me. Just look a little bit
Okay.
off camera. Okay, ready?
Okay. I started as a volunteer for Sustainable Community Roundtable, which is a local nonprofit in the Thurston County or South Puget Sound area. And I was helping with educational events and got really interested in the notion of local currency. And really from the beginning, I saw myself as a change agent and as serving a need in the community. So this wasn't something that was a passion of mine that I brought from years of study and, an economic background. It was really, here's something that needs to be done. This is a great community to do it. The people are responding and saying, yes, we want this. And it requires someone with organizational skills, who's a good recruiter, with follow-through. And I said, hey, yeah, I'll do that.
And what was the discussion? How did they come to decide on the IFTA model?
I think it was based on a good amount of research, a fair amount of research, not exhaustive or total. So there were other systems that we've learned about since that we didn't look into or entertain. So we basically looked at the LET system, which is a computer-based, the Ithaca Hour model, and we actually had the best introduction from the Cascadia Hour, which was one of Ithaca's early derivatives on the West Coast in the Cascadia bioregion. So we looked at that. And then we looked at commercial barter systems and how they operated. And the hour appealed to us. We liked, the notion of printing our own money is just so seductive. It's like, what could be more fun than printing your own money? So we did that. Yeah.
Well, talking about bringing your own money, how do you decide how much you issue, and what goes into that thought process in terms of overissuance or underissuance?
Mm-hmm. I wish I had some elegant answers. The truth was that we were somewhat confined by the amount of money we had in our little pool, in our little grant, to get us launched. So we needed enough money to print our first issue of the directory, and we needed enough money to print a certain amount of money. And we guesstimated, educated guesstimates of how many members we might have in the first year's time. And we guessed at about, well, gosh, if everything went really well, maybe we'd have 500 people. So we printed enough for that, and at the end of year one, we were right about 450.
Okay, you looked at the Ithaca model. You had a rule book to follow, you had a guide. What surprises did you have that you didn't anticipate?
Oh, how long do you have? I think the first of all, this was a tremendous learning experience for me. As I've said a number of times, I don't have a background in economics. It was not an interest of mine. I was not particularly successful in the dominant economic system, and I just didn't even want to go there. Money was minimally important to me. So for me, there was tremendous learning about what money really is, and then beyond that, how it operates. So to run a currency, we're essentially a little mini Federal Reserve. We're a local reserve. We're a bank. We have our own bank, as small and as simple as it is. We're a local complementary chamber of commerce. I mean, we have these fundamental functions in this project that I had no idea that this is what we were getting into. One of the big surprises was realizing that I was not alone in that even people who were very successful economically didn't have a clue about what money really was or how it worked, how it operated, the impact in their lives and the impact in their community when they spent their money and, you know, where they spent it and how they spent it and why they spent it. You know, for some people it was a really, really easy sell. You know, it almost becomes there are two kinds of people. There are those when you start talking about complementary currencies, they go, of course, yes, what a great idea. And then there are those people that, you know, it's a blank stare. It's, what are you talking about? And that, you know, and then there's another segment that I call sort of the fear-based segment that can't be legal and it can't be moral. And, you know, you can't do that. You can't do that. I mean, they're just outraged by the notion that somebody would print money and use it and that it would work.
Can you talk a little bit more about the philosophical issue of your relationship to money and what that meant, understanding money and the concept of wealth to you and how that changed when you got involved with it?
It really goes back to, I mean, it really goes back to some of the things that Bernard Lettier was talking about yesterday, and this notion that, and again, to me this is somewhat of an either-or. Either the universe is an abundant place or the universe is based on scarcity. And our economic system is based on scarcity. I mean, if you really understand how it works and how interest works, it's based on scarcity. That's what propels, that's the engine that propels money. So I very much, I guess in that sense, I was successful in our dominant system because I bought it. You know, I bought that there was scarcity. And so, you know, I found ways to get around my needs for money, and I found ways to get some of my needs met. But in terms of understanding what wealth is, I had the notion, like much of our culture, that it had to do with hard physical assets, or it had to do with a lot of buying capacity, or it had to do with a lot of debt. And what I've learned is that's not a meaningful definition of wealth for me now. So another word that we hear tossed around in these circles is social capital, and I have come to understand what that means personally, because by working for 2 years in my community, very, very hard to get this project up and going with this group of people, I and the rest of us, we all have accumulated, we have earned a tremendous amount of social capital, which means that when I go out in public, a lot of people know who I am because I've stood up in front of innumerable groups selling them or talking to them about complementary currency. The value of the time that I have spent in helping this project be born now can come back to me in a lot of different ways. For one thing, of those 450 people in the directory, I know a good many of them. I know virtually all of them by name because I've pored over the directory with the database manager. But I know a lot of them by face, from events, or from personal interactions. So my personal community has enlarged tremendously, and my sense of security, which at one time I thought meant having a lot of money in the bank or a lot of assets, now is much more based on what do I have to offer in this community, and I know I have a lot to offer, and what do other people have to offer me, and how can we keep all of that moving. So it's starting to move towards what we've talked about here is the gift economy. A good example, I mean, examples are good. I've started a new business as a coach. So I have a client who's a massage therapist, and we're trading straight across, which is great. I think massage is a wonderful thing to do for myself. And I trade coaching services for massage, and it works really well. And this is not uncommon, that people who start with currency oftentimes move to straight barters where it's appropriate and where it's reciprocal. So it's reciprocal. I have another client who's a massage therapist. Well, I want to work with her, and she can only trade. So I start giving massage to my partner, which is a really good thing to do for my relationship, you know. He's very appreciative. I get the goodies for it, but she's doing the work, which is great. And I coach her, which I love to do. So then I have a third client who is learning self-care. And so one of the things that I'm helping her with is what I call extreme self-care. You have to take care of yourself first before you can take care of anybody else. So I'm challenged with finding ways for her to get this. And I have some extra massages that have accumulated. I'm down here for a week and I can't use them, and so I'm going to give one of these massages to this client. Because to me, I mean, it has value, but I'm not going to use it. Even if I were going to use it, it's a great gift. And it comes from, for me, the transformation in myself, the feeling that I have abundance, certainly in the area of massage, and I'm going to gift this person. And she'll get some really important messages from that. One, that she can take care of herself, how good that feels, and also that there is enough abundance that we can all give. So, that's the best example for me of the transformation.
Well, you said you didn't do that well in a formal economy.
Mm-hmm.
Do you feel successful now?
Oh, very much so. And, so the benefit of that is now I can translate this new way of being and thinking, and my success in the other economy has shifted too. It's still, as far as I'm concerned, a flawed system, so the basic system is flawed, but because my attitude has shifted, I can operate there too in a way that's more comfortable.
And you see more success though?
Uh-huh. Oh, yeah.
Give me an example.
Well, again, with my business. So I'm able to, I recognize my value, I'm able to set my fees, I'm attracting clients. Some of that has to do with the social capital that I've built up in the local community too. So again, another way that it's coming back to me. People know me as, someone who gets things done, and they want a piece of that. Yeah.
Hey, that's fantastic.
Sure.
It's very interesting.
And simple. By way of preface, sorry, I've forgotten you, Ralph. Ralph is getting a tape of this, so I'm going to just try and run through it in a consistent way, take about 5 or 10 minutes, and then deal with questions, and that way he'll have a complete pack on it, and that'll be quite useful in its way. Because actually, we don't have this on tape yet.
Should we close the door so?
Please close one of them. I don't want to, if anybody sees what's going on and wants to join in, I think that's great, but if we close one, it'll calm down the noise a little bit. Okay, well, the issue for us around community currencies has for many years been the issue of how to get it fully engaged in the communities. We look at a community as basically a split into two sorts of organizations or entities. There's the us world, which is people, and we're all us. We're all down here. These are the people you see on the street and on the bus and wherever. And then there's what we're going to call the them set, which is really us in boxes, the organizations through which we live and earn our income and spend money and whatever, because most of us get our money from businesses or from non-profit societies. There's another sector of the organizational word. This is organizations, this is people. And the last organizational set in that frame is the government context, which is, a sort of a lumpy cloud of unknowing on the outside there, And money flows basically from things, orgs, to people, and then back from people to organizations and things. And for most of us, the cash that we earn and spend, about 95% of it, we just put backwards and forwards across this line. We actually do very little intertrading amongst people. It just goes up and down. And as regards let systems in the general world, let systems have always operated as green flow amongst people down here. But very rarely have we been able to get businesses to play in this. The businesses, curiously, have been furiously engaged in the same process of cross-trading with what they call barter networks, which operate in exactly the same model, but at a totally different scale. And they charge immense cash fees to the people who participate, so they're not at all appropriate for community development. Now, in trying to get back and forwards across here and get businesses to deal with the local cost currency and back and forwards, we just encountered so much confusion and dismay and whatever that we've elected to go around the corner, and this for several reasons. And the corner we elected to go around was to try and introduce the monetary process into this sector by going through the third sector, the non-profits, the charities, community initiatives, which are the sector that is most depleted by the current economic crisis. There's less flow to the non-profits from business. There's less flow to the non-profits from governments and foundations. And people aren't donating as strongly as they used to because we're all caught in the same tight cash squeeze. Meanwhile, of course, the tasks that face these organizations are increasing progressively. So how do we deal with this? Well, our proposition is to try and use a community currency model to implement high resources, high flow of cash and other resources to this sector, and in doing so to begin a turbine that flows around. Now the precise model we do it by is by splitting the whole thing into 3 clear sectors. And the sectors we've got are B for business, which is a whole collection of businesses that could be anything: big stores, little stores, wholesalers, accountants, dentists, newspapers, purveyors of computer equipment, who knows what. And the C section, or the community service organizations, because we don't want to limit this to registered charities or anything, or even formal organizations. Some of these community initiatives can be very informal indeed. And we characterize them as these triangles, and we call those the C's. And then there's the A's, which is anyone who cares. So this is an ABC cycle, except we start with B, C, A. And the root is this. We go to the businesses and say, we know that you have a responsibility in the community and you recognize it. You recognize it both as a moral thing and as a practical thing. If the community isn't working, the business isn't going to work either. But hitherto, when the community asks you for cash, it's hard because you're out of this stuff. So we're not going to ask you for cash. We're going to ask you instead to donate the local currency, which I'm putting here as a green. And the businesses are invited to donate local currency, not cash, not products, at quite a substantial scale. We're talking about something like, say, 10% of their total wage account. So if you're talking about a business that, say, does $200,000 in wages every month, we're talking about, say, $20,000 a month of donations from that business to a range of charities, range of projects.
In green dollars.
In green dollars, in the community way dollar. Now, this really means that all of these affairs go to a minus position in the game. All these businesses are now negative, and all these organizations are positive. At whatever level, they're recognized by the donors as being appropriate. And that opens up quite a lot of flexibility, because you have a very broad cross-section of potential projects in that. Now, normally the implication is that these organizations would then use that funding to purchase from these businesses and so on, and that's perfectly achievable. It's also possible that they would use some of these funds to pay people, volunteers, to recompense people for their services to the organization. But the one that we're actually looking for in terms of being effective in opening up the whole concept is that the main transfer between these two networks, the people and the community organizations, is that the charities provide local currency to a person who says, I like what you're doing, and I'll give you $500 cash and $300 cash and $200 cash to each of these projects, because you're going to give me exactly the same number of community way dollars. Do you get the picture? This group, the people who convert the green money, the local money at the charities for hard cash, are basically saying, I like these projects and I wish I could support them better, but I've run out of spare cash. My charitable giving is limited. However, since I could spend this green stuff at this grocery store and that restaurant and in this wholesaler or whatever, then it's okay for me to give you 1,000 if you'll give me 1,000 community way dollars. So the consequence of the first act is that businesses make a donation and charities are given assets in the community money. The second function is the transfer to and fro. We call it making change for the better, because fundamentally all that this person is doing, all that this person is doing, is they're taking one money and exchanging it for another. They're putting cash into their favorite project, and they're getting a money that they can then bring to the businesses. Now, the strategy behind this is that it offers a very simple option to each of the three protagonist groups. They don't have to worry about the theory of community money. They don't have to be invited to think deeply about the significance of this, that, or the other, or to analyze what, which, wherefore. We give them each a simple question. To the charities we say, would you like some more money? And so far that's been quite positively responsive. It's fairly straightforward. They're looking for support. They spend a lot of their energies and time on trying to raise money, and they don't get very far with it. It's a high-cost process. So anybody who comes to them and says, we think we've got a way to raise money for you, is liable to have a fairly good reception. Then we go to this group. Well, actually, we don't go to that group. We go next to this group. Having worked out a bunch of potential beneficiaries, and in Vancouver, for instance, the beneficiaries involved are two community centers, one of which has $1 million to build a new sports facility, but they need more cash to fund it, to staff it, to furnish it. So we're trying to raise $1 million for one of these community projects. Another community center in the east side of town has a range of projects to do with multiculturalism, youth, seniors, food support, all sorts of things. So they've asked for a batch of funding in 20 different areas. But again, they're asking for a startup revenue of about $1 million from this. So then we go back to the business community and we say to them, now here's the deal. You want to make good with the community, but you can't afford the cash flow. Well, here's a proposition. We bet that using community money will increase your business's turnover by 10%. Quite simply, as a business proposition, on the bottom line for these guys, making a donation in this way that is converted to the general public will bring the general public to your business. And if you have control over what proportion of your sales you take in cash and what proportion you take in the local currency, then you can be perfectly secure at taking this on. So a restaurant might say, we'll do 50% community dollars, 50% cash. A retail grocery chain might be able to go to, say, 10% or 15% in the community dollar, but they still need 85% in cash because that's the hard wholesale cost of groceries to a downtown retailer. So each business basically has a little valve, a little control throttle where you can say, we want a lot of business, we accept a lot of community way dollars. For instance, if the restaurant said we'll take 100% community way dollars, they'd be well patronized. But it wouldn't be too prudent of them because they've still got to buy the food and whatever. And they got to pay the taxes, because every time a dollar crosses this line, right, not in this case, there's no tax implications of this exchange, but there are tax implications for sales tax and there are tax implications for income tax when the money flows back. Because what we're trying to do with this is not just make a once around the loop, but we're trying to get to the point where this business is back to zero very quickly, because they're on the forefront. These are the restaurants and retailers that people want to use. This is the accountant. Now, not everybody goes to the accountant that often. This is the wholesaler of, office equipment. This is the guy who builds restaurants. This is the newspaper. Now, there isn't much call for these people to trade directly up there, but there's lots of call for these people to trade. So you can get the money moving through in a cascade, sort of refluxing loop. And the consequence of this, we are pretty damn confident, is that we're going to get a whole bunch of businesses in here suddenly clicking to what money means when you move it around and around and around. Because as you know, the problem with the cash is it comes in from outside, wherever, it goes to people, it goes out, and it's gone. It doesn't recirculate. Well, there's a little bit of wage circle, but not much. So using cash is depleting your community, and the business that uses cash is saying goodbye to it every time it uses it. By using this green stuff, it starts out by donating it, sees it come around, sees it creates more business, and says, hello, this could be a good game. And then it starts saying, well, we'll use it for more purchasing inside the network, and we'll start, for instance, the owner of the business can start taking it as personal earnings. You can start offering it to staff as bonuses, as supplements, as general credits of various natures. And pretty soon we expect to see a major turbine happening here with a continuing spin-off into this sector of somewhere between 10 and 20% of this turnover. Now, these figures we expect to be quite substantial. The scales we're looking at are about, as I say, 10% of a business's wage accounts. So if you have 100 businesses, 100 employees in the business sector, in the groups that you've engaged here, then that results in a fairly substantial flow over this way. In fact, it's about as much as 10 people's wages flow over to the third sector. And that's not just a big issue for these guys, which it certainly is. It's also very important for the other agenda in here, which is the DOR. We have a thing that we call the DOR, which is a disappearing organization. It's an organization which is convened to achieve something, but has no intention of existing beyond that process. So it's a disappearing organization. And all the development of community currencies is likely to be associated with interim organizations. It's not going to be a long-term deal. It's a bit like starting a bobsled. You only push it so long. After that, you get on. There's nowhere to push it after that. And as you start off community currencies, at this stage, we need a lot of organization and financial input. Once it's cooking, we don't need that input anymore. So we postulate that an organization can be convened to manage and develop this process and to be paid from 10% of this transfer. Now, that means that you're setting yourself up in the initial stages as essentially a community charitable fundraising organization that is contracting to raise funds for these organizations and do the exchange process and set up the marketing and do the solicitation for 10% of the donation base for a limited period. Because fundamentally what we're doing with this model is really replicating the current U.S. commercial barter network, at least in their... that's not going to work too well.
Sorry.
We're replicating a charging structure that the U.S. barter networks are currently using in a $20 billion industry. There's about $20 billion of transfers from business to business in the barter clubs. And there's an agency in the middle there that's taking about $2 billion in revenue from that process every year. Not one agency, about 1,000 of them actually. Now, we foresee that if an organization is set up, for instance, in the Bay Area or in where we're working in Vancouver, that draws 10% of this up to a limit that is currently suggested to be about $1 per person in the population area. So in our population area in Vancouver, for instance, there's about 2 million people. So we're saying for $2 million going that way, 200,000 can come to this. And we think that's plenty to start the whole show rolling. And that's basically how we see Community Way.
This is something that's somewhat similar that exists right now in Palo Alto, and I see yours as an evolution of something that's quite well understood by our community.
Yes.
The local school self-script. This is one that a merchant who is a small merchant, you just write in the numbers, but there's also 10 supermarkets, and they all have their own script, and the schools every morning self-script, and they raise $16,000 a year for the schools.
It's a perfect transition. Our school, one of our high schools in Canada, started this off with exactly the same deal. They would create grocery coupons. They'd give them to the school graduating class for $22.50, although they were normally $25. The students would sell them to their parents for $25. The profits ran their dry grad celebrations, and the families just went shopping at the supermarket. So it's a perfect loop. Now, the trick with those ones, or the lack of it, is that basically it stops at the first point.
Yes.
Because the businesses that have set that up, and they've done good for the charities, that's great, but all they've done is taken one slice at it and then tear it up and drop it in the bucket. Our intent is to make the money that moves around this have the longevity, the persistence, the maintenance.
But this is why I love your program so much. I see it as an evolution that is quite adaptable.
We took it from an Air Miles program at one level. That you can, a lot of charities are raising money by giving people Air Miles for their donations. And it's the same thing, that people are not actually dried out. If they can find a way to donate that still leaves them with purchasing power, then they're very happy to contribute more. So that's the basic philosophy. So let's go.
The one thing that I don't quite understand is your door organization there.
Door. Door, yes?
Door?
Door.
Oh, Dorg. I thought it was a door between two. Okay. Anyway, your Dorg is getting $200,000, but they're green dollars.
Yes.
It's 100% green dollars, and it's only going to be valuable to them if they can spend all those green dollars in those businesses. But what if they have to buy things that those businesses aren't selling?
We would expect to see direct conversions between this organization and people as well.
So in the same way as they're trading...
This is intended to be youth employment, you see. So if you've got some youth in here, and these are their parents, it's a damn good way of giving them a well-paid job in a sort of a youth enterprise development process. Now, we're also seeing that we can set that up with a backing foundation as well. And it would be most productive to have maybe a local foundation that's involved in this concept to be guaranteeing this conversion right from the beginning so that this organization is well liquid. If that's so, then you only have to have 100 people in the employment of these businesses to support every full-time employee there. Now think about that. That means that if you have 3 full-time employees here, 300 in there, that's all you need to make this thing fly. Now how many businesses are there in the San Francisco Bay Area? A lot more than that. I'll take and come back to you, Ken.
Well, I have a comment and then a question.
Once they've learned how to play with the general concept, then you're opening up to them multiple currencies which have these options of positive and negative for all concerned.
But let's say organizationally, who's going to be on the board? Who's going to make the decision making? Who's going to do that?
Well, this group?
I mean, yeah.
No, they don't.
This little disappearing
org.
This one.
The org.
I mean, who are they going to represent? Are they going to be businesses, nonprofits, or anyone?
They represent basically people who are committed to introducing community currencies. That is their function and purpose. They make no decisions, particularly about what beneficiaries are brought into this. Obviously, it should be a totally open frame. They're making no particular distinctions about which businesses can be legitimate contributors. They don't make decisions.
But they have to. Every single day you have to make a decision. Am I going to talk to this business or that business or this nonprofit or that? I mean, they do. They will, and they'll be selective. As I've indicated, there are certain strategic sectors. But it's not their position to be the definer of the process. They're opening the process and letting the protagonists decide exactly where the money goes and who's backing it. I'll take one here, George, and then come back to you. No, over your head, sir. Move.
The local currency for Vancouver, you're saying, will it be LADs, will it be script?
It can be anything. This we see as an accounting thing. All you do is say minus 10,000 plus 3 plus 5 plus 2. Right? So that's it. That's all it takes to do that. This will also likely be some sort of an accounting process, but what the person ends up with could be paper, coin, it could be a card with a direct debit, a swipe process, it could be an identification card without direct debit. That's perfectly acceptable as well. You just sign when you go in the store for 45 bucks and you show your card. Ideally, we're going for smart cards. But to go for a smart card model, we need to have a projected 1,000 businesses involved in this area. Then it becomes sensible to pre-purchase the card readers and the cards, and then you have a smart card package that first of all carries just the community way currency, then progressively brings in the Palo Alto and this and that and the other, whichever people want to use. So the medium is not relevant to this. This will work whether you do it with this, that, or the other. In fact, this is one of the reasons we're interested in bringing this up in the States. Because I think that this form of creating script in circulation is a damn sight more secure and stable and strong than the current stuff that's being used, where, you know, you print the money, give it away, and hope that everybody trusts it. This one will make it solidly back, because every dollar in circulation will be a business promise. I'll take George, and then I'll take Phil, and then I'll come back to Steve.
Oh, and you had Edgar in the back there.
Oh, sorry, Edgar, yes. You're so demure.
Is it possible that one of the community service organizations at the end of the month might come to you and say, look, I got all of the screen stuff and I can't pay my electric bill?
Funny, we're talking to our local hydro company.
What?
We're talking to our local hydro company, our utility company,
Yeah.
because we've got a project in our own
Okay, well,
hometown.
all right, I picked the wrong one. And they get stuck with a lot of script when they need cash.
Yes.
And then how would that resolve itself?
Well, first of all, are they worse off than they were before they got the script?
Well, they are if they thought they were going to get cash. because-
Well, that would be, yeah, right. So we're not able to promise these guys that the conversion will happen immediately and fast, because it's selected according to how people support that project. So there's a double vote here. The businesses vote for the project, and then people vote for it. And sometimes you can find businesses that are supportive of the project, but the people are not, and vice versa. So you're going to have some variability in how this is happening, and we cannot promise any non-profit that this is going to solve their cash flow problems next month. But we don't see why it can't augment their cash flow situation on a progressive basis.
Where is the extra value infused into this?
Well, imagine that none of this was happening. It'd be a much cleaner diagram for a start, right?
Oh, well, that's all happening,
Yeah, well, it isn't.
whether you have the community currency or not.
No, it isn't.
People are buying from those people, and those people are making contributions, maybe not at the level you want.
Exactly, that's the distinction. Yes, there is stuff going on. There is some business donation. There is some percolation of cash into the general. What you do, the money can't leave. Now here we're developing an interface between the two that sort of draws the cash from its outflow into an internal process. And whereas one can't be quantitative about this at this point, George, I think we can be qualitative. This is better than not this. And that's about all we can say at the moment. We don't know how fast it'll go, but we do have a very simple method of funding the people who will make it happen. And if it happens very fast, there'll be a lot of people in this organization. If it happens slow, it'll be a small group that works for a year or so. Where are we going to? He's next.
And then,
And then Edgar.
Am I correct in understanding that in your first go-round here, the people in the bottom layer would not be able to buy things with community currency from businesses until they had put cash into the community service organization. So for your first go-around, you don't have people on the bottom being regular members of a community, of a LET system.
No, you're offering them a guaranteed money. Whatever they get by this exchange is guaranteed to be accepted.
Right, but that's the only way they can get it. They can't create it by doing a purchase on credit.
Not in this model.
Yeah.
In this model, which is your bunny slopes, the starter thing, this is your kindergarten for the businesses. And this is how we're pitching it to them. We're saying, listen, the best thing you're going to get out of this is not the good you do in the community. It's not even the sales you'll make. It's what you learn about both those processes. Because that's going to make a huge difference to your role in the community over the next 20 years. So the learning is the benefit for these guys. We're giving them a free trial of something and doing good to these people in the process. Now, to ensure that, within this particular initiative model, they're the only issuers. These are carriers, and spenders. But, you see, by the time this guy's taken 1,000 and spent 1,000, and we send him a statement that says, haven't you had fun? Now would you like to join a full LET system network, a full community currency system, a full this, then you're off to the races. And the same with these guys. So this is your taster, there's the aperitif.
And you set an arbitrary amount that they would have to have spent by that method before they could go ahead and make their own debits?
No, we'd say if you want to join a normal community currency with full privileges, you can do it today or yesterday. No impediment. You don't have to prove anything by this. This is a facility for teaching these guys how to do it.
What I still don't understand then is when they no longer have to purchase their green dollars from the CSOs using cash.
When this is one network, it's called the Community Way Network. At the same time as you introduce this, you've introduced the capacity to run 25 other networks right there, right then. And so as soon as somebody says they want to be in it, away you go.
But it's a different network.
It's a different network, all of them different. I'll take Edgar at the back, and then I'll go to Steve and come back to you.